Okay, we are officially recording, so anybody on here who doesn't like recording can exit now. Nothing we say is investment advice, educational purposes only, etc., etc. That out of the way. I should actually put something when I post it. I should have a little screen or something just to be sure, because I too was audited by the state, and yeah, no issues, but just kind of has me heightened on the disclosures and all that stuff. But yeah, why don't we jump in to Martin, Marietta, and Vulcan? I guess just if anybody has any thoughts, maybe we can start with Andrew. You said you don't like the industry, and I think I put it as it's a strong moat but a small castle. Would you agree with that or disagree with that statement?
I think I would generally agree with that. It's a strong moat, but why would you want to be in the business is kind of the summary.
Yeah, I was expecting to find, and I decided to do the deep dive because I saw Tom Russo owned it. You know, something just piqued my interest. I said, let's just take a look at this. I kind of and I knew going in. I looked at Morningstar. I looked at some of just kind of did a quick little peek under the hood, and returns on capital didn't look great, but I expected to find something, whether in the accounting or what have you, that it was like, oh, okay, here's this hidden gem. But I don't know. I just think it does seem like they're very strong positions locally, these local monopolies. But at the end, right, they're sort of still a commodity business. You're literally selling rocks.
I think I would summarize this type of business as one that Buffett would buy so that he could use the cash flow on something else. If he was interested in that kind of business. And I tend to not be that interested in businesses that don't have a lot of opportunities to reinvest in themselves.
Yeah, and that was kind of the thing. It's like, okay, and again, I'm still kind of struggling with this, like the historical cost accounting, because you might own these quarries for decades, right? And so how do you adjust for that when you're calculating returns? Because you really if you bought, I mean, if you bought these businesses to just operate and kick cash upstairs, right? Like no reinvestment, you wouldn't have to invest. Depletion really is a non-cash expense. You literally have 75 years worth of inventory sitting under your ground, so you don't have to worry about that.
Yeah.
You have sort of a natural inflation hedge. You still have to pay to get out of the ground. You have that capital investment in machinery and equipment and so forth. But the way that they're situated, I mean, they're continually buying new quarries, and it just seems like you're probably stuck to that sort of 10% return on capital. It's almost like it's kind of like a utility business, I guess. But I don't know if there was someone on Twitter that reached out, and we never ended up having a conversation. But I really want to dig in, and I'm still curious if there's something I'm missing, whether it's in the pricing power or sort of a tailwind of growth in some of these markets that they're in. I don't know.
Well, I think the other question is, do any of those things matter if you've got a better idea?
True.
But maybe, Adam, you could walk us through a little more specifically what that particular business does and the space they live in.
Yeah, sure. That's and just quick, Helen. I mean, you're probably familiar with the businesses, but do you have any? Have you owned them? Do you have any knowledge of them?
With Vulcan, and once again, I've plead guilty to not having read the whole thing. In fact, I've just pulled it up. But there's generic businesses, and then there's ones that are driven by governmental demand, which I think Martin Marietta is, Lockheed Martin, those kind of things. So there's other factors that play there as opposed to pure market. I think, doesn't Vulcan Materials supply some materials like in road building and all?
Yeah, they're both trying to situate themselves in these sort of mega regions, these super regions, and roughly half of their business is public demand. So whether it's roads,
Right.
bridges, that sort of thing.
And there's going to be a demand for that, especially around here. I've got a friend that's a bridge engineer, and there's a lot of bridges that are out, but that all depends on governmental funding. So that's not in your free market, let me go buy a Coke thing. That's in, can I pass the initiatives and the money and build the toll road and get that past the, get out of the NIMBY kind of attitude. We've got NIMBY on steroids right here. And that's like they're trying to build a new bridge across the Mississippi River. We get I-10 and I-12 meeting as it goes out to the West Coast. And it's nobody gets on the interstate here that's a local. So my point would be, okay, this is demand by what can you pass and how can you fund it?
Yeah, and they both in their materials do a pretty Martin Marietta, actually both of them is really interesting if to just look at these regions. They had a lot of data. I mean, they're tracking not only the federal spending and appropriations, in this case, 110 billion, but then they're looking at ballot initiatives. So, 2021, the states approved 87%, worth almost over 7.5 billion. So that's very important over time. And I think, there's probably a case for pent up demand. But maybe just taking a step back, to Andrew's initial suggestion to kind of just walk through the business. It really is a pretty simple business. I mean, and I like that. I mean, they're buying. You buy a piece of land, you drill some holes, test, make sure there's enough rock underneath it, and the minerals that you're looking to extract, and then it can be a lengthy permitting process if you're doing a greenfield quarry. Can take in some cases a decade to get these quarries permitted. So you have that very strong NIMBY effect of, why do you need a second quarry? Why do you need a second junkyard? Why do you need a second landfill? That's a very strong force. Because once you're in the area, you're in the area. And so, they're taking these stones, crushing them, into sand, gravel, so forth. And there's a lot, you need a lot of fill for these construction projects. And the limiting factor and what makes it intriguing to me is that you have this natural limit of your geography because of how low priced the product is. Roughly a 50-mile radius around a quarry. So that's really interesting. And then each of them, Martin Marietta and Vulcan both have the majority of their business in aggregates, which is, crushing rocks basically. And then there's all these other downstream businesses like asphalt and cement and concrete that use a lot of aggregates, but those are much tougher businesses. And I didn't really get into it too much, and I didn't find a ton of data on. Like, they didn't break it down. Like, I'd love to do an analysis of the true capital intensity of those other businesses, because they have identifiable assets. Maybe you can kind of go at it that way. But I think it's just easier to get into the asphalt and concrete businesses, and probably a little bit more capital intensive and cyclical and so forth. And as we just talked about, the end uses and the markets heavily dependent on construction, just broadly speaking, and then getting into public infrastructure, which is pretty stable once you have it, because generally governments want to keep those programs going even through a recession. You might have private construction tail off when the economy is bad, but public will remain. And so there's all these, I love that. I'm just looking at, page 5 here in my write-up. Martin Marietta has this wonderful graph. And again, if you're interested, even just sort of in the data, go into the the annual report, I mean, they have a section on each of these. In particular, this Texas Triangle is a really hot and growing spot. Um, the Southwest in the United States, Arizona, the big one. And I didn't realize this. The Southeast is sort of stone poor, or can be. There's a lot of clay and stuff, but they'll actually ship it in. It's actually economical to ship it in. I think Vulcan has an operation on the Yucatan Peninsula in Mexico, and they ship it up to the Gulf Coast. And then Martin Marietta has an operation in the Bahamas, and so they'll ship it up to the East Coast, which is just kind of interesting. And both of these businesses have grown through acquisitions over time. And that was one thing that I found, that it's just kind of, again, to Andrew's point, they don't have necessarily organic reinvestment opportunities, but they have, so they've used that capital. Their capital allocation playbook has been to buy other quarries individually, in ones and twos, or like that bluegrass acquisition that Martin Marietta made, which was a pretty big acquisition. But and both of them have over time, but they've emerged as kind of the two leaders in the industry. And I don't, from my takeaway, the scale doesn't necessarily matter. I mean, you're still dealing with local governments for each quarry. You're still dealing with local governments for these projects. So I'm not sure how much scale factors in, other than maybe the sort of advantages of scale, of expertise, and being able to take a team from one quarry to another and share best practices and that kind of thing. But it was interesting to see the pricing power in aggregates well ahead of inflation. So again, sort of one of these businesses where maybe this is just mood, but if they ever got beaten down, and just totally super cheap, it might make sense to buy them. But to Andrew's point earlier, all right, what else could you buy? What is your opportunity cost at that time? Just kind of going through here.
Well, that brings up another question. What is your take on? I just skimmed through it real quick. What is your take on one of these companies being focused so much more on stock buybacks, when that might not actually be the best use for their money at the moment?
Yeah, it's certainly a negative. At least it would seem to be. Martin Marietta being I kind of, and I don't know if it was a bias because I knew Tom Russo owned it, but I kind of like Martin Marietta better from sort of a business standpoint. But the capital allocation, you're right. If they're making these big buybacks when shares are expensive, because I don't like to see management do that. Just, oh, well, we're returning capital to shareholders. Well, you're returning it through a, sort of a, I have this mental picture of like a roller or something. You're returning 100% of capital, but by the time it gets to shareholders, it might be 80% because you're overpaying for shares. So, and that's where I don't know. I still feel like even after going through this, I don't fully understand it. Like I still feel like there's still some work to do here to understand it, but but that being said, I don't think I'm going to find that these businesses are all of a sudden, because of some accounting quirk, actually earning 20% on capital. Like that's not going to be the case. I'm pretty confident.
Maybe you just put that in Buffett's too hard pile. Even though it's a simple business, maybe it's just like outside of your expertise. I mean, from an economic perspective, I don't see anything super special about either of these businesses. It's pretty simple what they do. it's pretty clear that they're not going to have an upstart company come in and disrupt them. But at the same time, they're kind of limited upside on what they can actually do.
I just thought of this. This business is almost like the inverse of waste management, right? Like waste management business, you're putting this distribution network out, you're collecting all this stuff and you're putting it in a hole in the ground. And this business, you're digging the stuff out of the hole and using a distribution network to push it out, right? So why is garbage a better business than aggregates?
Well, I would describe this almost like an annuity where you pay up front for it and then you get the money back over time. And I think in general, investors like us are not as interested in that kind of business.
Well, from what I hear you both saying, it doesn't have a compounding characteristic. The compounding comes in
right.
that you're buying other companies. We happen to know somebody here who they have a gravel pit business. That would probably be one that could be bought out, but that's the only way you're going to grow. And then your income is going to be through governmental contract primarily. So I don't see a compounding characteristic, which I think both of you are saying.
I think that's a much better way of summarizing what I was trying to say.
But the sort of the plus side is if you don't have to pay for your inventory, right? Like that inflation, you're never going to have to buy what's under the ground twice. So you have that inflation protection. And then you have, from a volume standpoint, if the local area in which you operate is growing, you'd have a volume. You would have organic investment in, say, additional crushers or equipment and that sort of thing if your volume goes up. But that's the only way you can grow. So that's why I still have this thing in the back of my head. Like, is there something I'm missing here with those factors that make it actually a better business than it seems? And I don't know. I mean, I'd love to talk to that quarry operator of yours, Helen, and just kind of quiz them on it, because it's still intriguing. But I think, to your point, Andrew, maybe it is just the too hard pile. Maybe it's like the best you're going to do is understand this business a little bit better and probably not gain any real insights. I don't know.
Well, another thing, Adam, that just came across my mind. I grew up in South Texas, so we had quarries all over the place. Okay. And the thing is, in quarries, it's not a seized candy. Okay, it's not a seized candy where you can take the same amount of equipment and make more and more and sell more and more. You have to dig to sell more and more. You have to go through that process. So not that it's capital intensive necessarily, but there's no way to, like I said before, compound that growth that you can in another business. I don't see that aspect of it. It's a bond, not a stock.
Yeah, that's a good summary. Yeah, Andrew classified as an annuity. And maybe that's why they're trading still at the mid-20s PE ratio, because it's a bond alternative. Well, we don't have to beat this up. If there's anything else, anything else on that anybody wants to chime in on, or Nathaniel, if you have any kind of particular expertise that we don't know about, or maybe some questions, we'd be happy to talk about it. But we can move on to a sort of general discussion if you want.
I think I will add that I appreciate your bravery in digging into a business like this that someone like me is just going to dismiss instantly just because of what it is. So I do appreciate that you're reaching out there and looking at stuff that's a little bit out of the way.
Yeah, absolutely.
Well, it might be because you're smarter than me, and you know how to just avoid these things. But
I know how to say no.
No, I don't know. It was like, okay, well, I'm like, Tom Russo owns it. Let me just take a look, because I did have this feeling like, oh, I've kind of wasted my time. But I don't know. I mean, it's one of those things 5 years from now. It's, oh, okay. Maybe there's a supplier to the industry or something, jumps up that it makes sense. So I don't know. I don't think it's totally wasted time to your point. And I'm not trying to be totally contrarian and go the total opposite just because other people are going another way. But it's like, yeah, hey, look, like let's take a look at this simple, boring business and see what we might find and see what we might learn from it. So I appreciate that comment nonetheless.
Well, I would not be able to follow you if you talked about banks every time either. So
Well, so and here's maybe just that's sort of a good segue to. I was just talking to someone earlier this week, and I said, "All right, I'm 2 years into this thing, watchlist investing. I think I kind of need to start pivoting to maybe some more updates, like not just a new issue, new company every time. Kind of move to okay, here's what's on the watch list. Here's an update on the company. Here's what maybe looks more attractive now." And as he put it, sort of very bluntly and aptly, uh, I need to do more watching of the watch list. Yep. Okay, that makes sense. So I don't know if you guys have any thoughts on how that looks. What you'd be looking for going forward. But I was kind of thinking, maybe like a timeliness section, and then sort of pick a couple companies, pick even an industry, and say, okay, here's an update on these companies that are on the watch list. Um, once a year or whenever it's relevant. I don't think I could do a quarterly.
Well, I think the easiest way to do it is maybe just devote one issue to a quick update and maybe a paragraph each on the businesses you like the most or something like that, or ones that are in industries that change more often than others.
Yeah, that's a good point. Maybe, if there's nothing to update, why waste the space?
Or a quick like, maybe this is my bias speaking, but like a quick macro update on this is what's happening in the banking industry right now. We're following these banks. This is how they might be affected by it. That's my bias speaking though. That's the thing that I love doing.
Yeah, it's like, yeah, no, that's that might be relevant. I want to avoid being a poor like news reporter. Like there all the smart people on CNBC and Wall Street Journal, like they're covering this stuff. Do I need to do that? Or maybe there's a way that it's just through my filter. I don't know. I mean, what do you guys think? Especially, Nathaniel and Helen.
I'm listening to a podcast that I got. I'm about halfway through, and it's William Green's interview with Guy Spire. And it's really interesting. They get into this point about how they think differently. And this is just a mindset kind of thing. He says there's those that go to the Berkshire meeting that are they got to criticize Warren and Charlie and that. And then there's this us dyed-in-the-wool Berkshire people we're going for the mindset. It's the Monishes and it's the Guy Spires and stuff. And I've got to go back and listen to it again. But there's a difference between what CNBC puts out. It goes into that. It's all the math and none of the quality of management. There's 50% of the analysis of a company that they and the CFA Society are totally missing. They're good on math, but when you're talking about qualitative issues, they don't address them.
Okay. Yeah, that's yeah, and they're almost by definition, well, maybe not by definition surface level, but they're saying on the surface, okay, this changed and this is the hot news and that's that. And I mean, you do a good job with this, Andrew, sort of just distilling, getting below the surface. You're like, okay, here's the undercurrent, here's the longer term trend, that sort of thing. In your writings, I've observed that over time.
Andrew, where do you write where I can take a look at your writings?
I have a blog.
Pop a link in the chat, Andrew.
All right.
Unlike my service, Andrew gives away his stuff for free. So and it's worth just as much. So
So I got to get in on it before he starts charging. Is that what you're saying?
I don't
been
know. I
trying
think
to.
it'd be neat to see just an update of where, like, you put a value on a bunch of the banks, like Hingham and whatnot. I'd like to see what you think, how they are doing now. Like, are they still overvalued? Are they still undervalued? Like, what is it? The Copart, I think it's called. Yeah, because there for a while, and then you thought it was getting pretty overvalued. So I wonder where you think it is now.
Yeah, that's that's a good. I kind of shied away a little bit of like saying here's exactly the value. I got to kind of think about, but it's challenging because I'm in my other job, a registered investment advisor. I have to kind of be careful of what I'm putting out there. But I think there's a way I can do it to just, to your point, Nathaniel, just kind of say, all right, when I looked at it, it was at this price, and maybe like an update on, okay, business. Here's a quick business update, qualitatively, quantitatively, and maybe here's kind of a quick updated valuation, and maybe just leave people to draw their own conclusions. Kind of give you enough information, but not point to it and say, buy or sell this. I have to avoid doing that. But yeah, and Copart. I mean, we can certainly segue into that. Nathaniel, I know we've had that conversation about Copart, and it's sort of. I think it's one of those cases where it's the letting the flowers run, right? Buffett's comment, and I know Andrew, you have similar thinking on that. Because it's looked expensive for so long, and it's like it's such a good business. So I know you've got plenty of opinion on Copart, Andrew, and maybe just talk about how you think about that.
Well, the one thing I do know is that, Adam, as long as I have known you and talked about Copart, you have always said that the price is too high. No matter when it is, 5 years ago, whenever, 3 years ago, whenever, it's always been like, it's not this super great bargain that you were always looking for. And maybe I converted you a little bit into the idea that it's not a great bargain, but it has a lot of big opportunities of where this business can grow into, especially with expanding into Europe. And so there are a lot of things where I guess it's how much value do you put on the potential opportunity they have to make the business bigger, because they've got the potential to expand more into Europe, but then they also could make their market a little bit bigger by selling more than just salvaged cars, selling cars that are, I guess, not damaged at all. And there are things that the management talks about working on in those areas. And it's also just really well managed. So I'm comfortable paying a little bit more for something that I know is going to be treated well. But it is funny though that you've always said the price is high.
Yeah, and I've learned to tolerate, especially with a company like that, to sort of tolerate some apparent overvaluation. Because I think, just looking at, I mean, I could be wrong, and I'd hate to lose my ownership because of that. It's just,
Well,
yeah, and it's easier to hold than sell.
Yeah, and one thing I'll add is that I think the management generally might just agree with you that the price is high, because they don't buy back the stock and they don't pay a dividend. And when they do buy back the stock, it has been at a very substantial, like you would recognize the company as cheap at that time when they decide to do a buyback. And they also don't sell any of their own shares when they do those buybacks. So you could get a clue from the management when they think that the business is significantly undervalued, but it's been many, many years since they've done that.
No, it's a good point. And I mean, just it has the whole package, right? Like they're not just buying back shares to buy back shares, and um, they'll let cash pile up, and there's so many positives. Yeah, with Copart, there's so many positives. The reinvestment opportunity, the way that management treats shareholders, and even I mean, I just love when I read and listen to the conference calls with these guys, and it's like you can tell their confidence when they push back against analysts. They're like, no, like we can't tell you what the ROI is on this land, but we're going to want it 20 years from now. Like that's
Mhm.
the kind of thing you want to hear. Um,
You can also look maybe at, I don't know if any of you guys noticed, but Carvana bought all of Odessa's, or a lot of Odessa's auctions, their land. And I'm wondering if you could use maybe part of that as an estimate of what truly auction centers like that are worth.
yeah, yeah, there's that element too. Yeah, because I mean, Copart has a lot of land, and if similar problem to looking at aggregates, you know, do you revalue the land upward based on what current prices are going for, or you know, kind of how do you look at that? How do you look at the accounting and um, yeah. What else? What else is on your guys' minds?
Who else plans to go to Berkshire besides me and Adam?
Oh, that's a good question. I
I'll
think all
be
of us
there.
will be there.
I'll be there for sure.
Does he may want to share like what all they're planning on going to?
To Adam's exclusive party.
Thanks.
Well, I didn't
I
know.
wish I
who-
had an exclusive party.
I didn't know who the speakers were going to be, so I may have some extra tickets if we can swing them. I signed up for the University of Nebraska Omaha and the two dinners. One's got Tom Russo speaking, and the second one's got Vicky Golub, which I really wanted to hear. But then this last week, I had read The Enduring Value of Roger Murray and sent Mario a letter, email, and I actually got a response. I got a phone call from him, which I was stunned. He's really generous with his time, though. We've sat down and spoken before at a couple of conferences and stuff. And so I've got a ticket to the Heilbrunn dinner, and I've got I also signed up for Guru Focus. So those are the ones. So I've got some duplication. I don't know where I'm going to be. And then usually I like to go shopping at lunch so I can get that out of the way so I can take notes.
What was it? Where's Vicky Holub?
She's going to be at University of Nebraska at Omaha. I might have a second ticket to that one. I don't know if I can swing giving the second ticket away because I bought the package and I didn't realize that was in there. So I bought that one because I really wanted to hear her. So I might have two tickets to that one. It's going to be at the Scott Center Friday night, I think.
Oh, okay. Yeah, I'm already booked for Friday. Yeah, it's tough fitting everything in.
So that's my little agenda.
Okay. Yeah, I'm gonna be, let's see, Friday on the Gabelli panel, and then I'm gonna have to be late to the bookworm, but Guy Spears asked me to talk at ValueX Berkshire. I think that's from like 10 to 2 or something. I don't know if that's open or what. I haven't seen anything on it. I don't know, and I haven't seen it in prior years. I don't know what it looks like. And then yeah, I'll be at the bookworm for a while. Friday, I was going to be at the last year I went to the Heilbrunn dinner. That was great. Were you there last year, Helen?
I think I was. I can't remember. I've been like 2 times to the Heilbrunn dinner.
Yeah, it was great. It was a great panel. Last year I promised Guy that I'm going to be having dinner with him in that group on Friday night. So I won't be at that this year, but that's excellent. Saturday, of course, the meeting, and I think Saturday. Let's see, Saturday afternoon. Did you go to the Andrew? Did you go to the Willow Oak panel? Did we all go to that?
I went, but then they kicked me out because I didn't sign up. So I stood outside the room and just chatted with the other people who got kicked out, and I had a good time.
Well, that's like me and Markel last year.
It's not the first time I've gotten kicked out of stuff at the Berkshire weekend. That's happened several times. But I signed up this year, so maybe they won't kick me out this time.
The Nathaniel, I don't know if I mentioned the YPO event. Have you guys ever done that, Helen? Oh, I know you have, Andrew, but
I got kicked out of that one last year. They said, "Oh no, you are not qualified to attend." So.
Oh, I've snuck into that one every time and never got kicked out.
You gotta let me know where it is so I can kind of and when.
She said she'd be here and that's what she did that number.
Sorry, Nathaniel, I didn't get that.
I'm sorry, my microphone turned on then off. What's the YPO? What was you talking about?
It's Young Presidents Organization. They host. It's usually the years I've gone. It's Tom Russo, Tom Gaynor, and Vitaly Katzenelson. I haven't heard anything on it this year.
I didn't see anything either about it.
That's pretty good because I mean you've got pretty close up access to Tom and all those guys.
Is it one that you can just sign up for and go, or?
You have to have certain criteria. That was a company over a certain size or something like that, which is why I didn't qualify.
I think the years that I've signed up, and I know Andrew. I mean, you've gone and just walked in.
I have never signed up, and I've snuck in every time I've gone. So I couldn't tell you how you're supposed to get in. I just know that they've never kicked me out once I'm in.
Where is it?
Where is it? It's not that. We usually walk over from the center. I forget.
It's just down
not
the street.
far. Yeah, there's it's down around the corner. I think, you know what? I'm trying to think. I could have this wrong. It might. I think it's like very close, or maybe across the street from the new Marriott. Or am I thinking? I might be wrong on that.
That's the Lucille's. That's the coffee shop. This one I think is up and around the corner from where the Courtyard Marriott, along the path where the river goes through it. That park. That's where I thought it was.
Yeah, that one's pretty good. But yeah, I liked the Willow Oak one last year. That was pretty good. And then Sunday, of course, Markel, and there's another one where last year I didn't even go in. I just stood outside and
I didn't go in either.
I think these side conversations, I mean, you never know who you're going to talk to and meet, and it's they're a lot of fun.
I'm looking up the YPO. It looks like you basically just have to be like a manager or something high up with the business that's got 50 or more employees, but it don't say anything about the event. I'm gonna try to apply and see if I can get a invite to the event, but I don't know.
Yeah, I would think, Nathaniel, that you would qualify. I think you would add something to that.
I'll let you guys know if I get in.
Yeah, but please do. And if I have to go back and see if they have an email from them from prior years, because I don't remember how I got the actual sign up. And I don't know if like Whitney Tilson's having a party. He always has something. Kind of wander into that.
His party has been smaller every year when I've gone. And I think what happens is the people who go to his party get invited to other stuff for the next year, and then they don't come back.
He's become less and less of a presence.
Yeah.
I'm sorry, who is that y'all said?
Oh, Whitney Tilson. He usually sets up shop in the the Hilton. I think both nights, right? Friday and Saturday.
Let's put them inside.
Yeah, and he always has a camera following him around.
Do any of you have the contact? I'm looking up last year's for Willow Oak to try to apply to that one.
Oh, you know what? I just sent someone.
You sent it to me. You forwarded it to me.
Yeah, I just sent it to you guys know Behind the Balance Sheet, Steve Clapham.
Mm-mm.
His stuff's pretty good. He's from the UK. He's going to be coming over this year. Let me see. I've got let me see. There we go. Yeah, I'll put the Willow Oak and the Markel registrations in the chat.
Thank you.
You're welcome. Do you know what's really good too? I wouldn't be able to go to it. Is the Creighton's panel? I haven't been to that in years, but every time I went, probably 5 years, it was always excellent. I think it's usually Friday at maybe like 3.
The Creighton panel is another thing I've snuck into. I don't remember ever signing up for that one.
When Andrew says sneak in, it's not like he's falling through the back door. I mean, he's just showing up and watching. Don't feel like you have to, evade some high security or something, Nathaniel.
No.
It just if you show up, they'll let
I'm
you
in the crowd.
unless they're super packed and they have to exclude you. But if you show up, they're gonna let you in. Yeah, that I've always liked that one. I met Bruce Greenwald one year. That was fantastic.
Oh, wow.
And
I remember that, yeah.
What can we expect at the Willow Oak meeting? That's gonna be my first time going to that.
A lot of really good food.
did Willow Oak have food? I don't
Yeah.
remember food.
Yeah,
Willow Oak's
that's-
it's at 5:30. It's right after the Berkshire meeting. So I was wondering if there'd be dinner or not.
There was a lot of really good food, and I think that's why they kicked me out. I took a plate with me.
Here we go. Value investing panel. 3:30 to 5 o'clock on Friday. I'll put this one in the chat too.
Now this will also be my first time for the how you say it, Hebron dinner or whatever, the Friday night dinner.
Heilbrunn.
Heilbrunn. How was that, Adam? How's that one go?
No, that's great. I mean, the dinner last year was just fantastic. It was this wonderful steak dinner, and then there's a panel. Mario's on it. I think Tano Santos is a moderator. Tom Russo's on that. Just panel of what's the woman's name? Oh, shoot.
Elizabeth Lilly.
Yeah, Beth Lilly. She was good too. She worked for Mario, and then she works for the Polad companies. They own the Twins, I think. You might know that name, Andrew. No, it's a good panel. I mean, I thought it was great last year, and there's opportunities to ask those guys questions and mingle afterwards. I mean, that's the thing. I mean, you were talking about Mario. I mean, all these guys are approachable. It's just that's what's so wonderful about going to Omaha.
Exactly.
Yeah, I think that the Friday, excuse me, the Friday panel, the Gabelli one, should be pretty good too. I wasn't able to stay for those other presentations, but they have two operating companies, and then Mario and get the other guy will be interviewed. It's always interesting. I think I watched the replay last year. So that's kind of my weekend.
Adam, do you remember the Boston Omaha stock I told you about?
Oh yeah, they having a meeting out there?
They're having a meeting Monday, right after the Berkshire weekend, so I was going to go to it.
Yeah, that's another one where I've kind of looked at it. I'm like, yeah, should I study this one a little bit more? And I just kind of passed. Maybe I
I
should.
feel
But
like it's a little bit overvalued. So I'm just watching it. I don't really have a big position in it, but I like to go to the meetings just to see what everything's about, see what and I mean, when you're listening to them, they seem really great. It's just that price still gets me.
Mhm. Yeah, another one is Trupanion. I've gone to that once, I think. I kind of soured on the company. I thought they were trying a little too hard to be an outsider.
Yeah,
But
that's what I've heard from other people who attended their event. I walked in there briefly to take some of their food and left.
You didn't get kicked out. You just left.
I just left on my own with the food on that
if,
one.
if you haven't noticed a pattern, this Andrew's goal is to spend $0 feeding himself on the whole weekend.
Exactly.
So he's the reason why all the goodies at the beginning of the Berkshire meeting disappear so quickly. He's putting Danishes in his pocket and fueling himself for the ride back up to Minnesota.
It's a tradition at this point.
I know it. No, it should be a good weekend. I'm hoping the weather cooperates, and there's all kind. I mean, there's all kinds of stuff. I mean, you could pretty much just walk down to Old Market and strike up conversations with people at bars and stuff. I mean, there's just so much going on.
Andrew, one of the things I say around here is nobody speaks value investing language. And so I'm a party of one, and it's so refreshing. It's like a breath of fresh air to go up there and stand with somebody at 4 o'clock in line from Singapore or Brazil or England or whatever, and you've read the same stuff. You may think differently, but you can have a conversation, a respectful conversation about it. We speak the same language, and that is not the case in the rest of the world, investing world, in my opinion.
That's definitely true. I always feel better after the Berkshire weekend. I feel like I'm not the insane person. There are other people who have the same perspective.
Yeah, it's definitely an annual reset. Like I always come away so motivated and refreshed, and yeah, it's great. So I'm convinced it's going to continue well beyond Buffett and Munger.
Just the people like us who having the conversation, that's going to go on. We'll go because of that.
Yeah, 100%. Yeah, it's just, I mean, some people, you only see once a year at the event, and it'll definitely change. I think it'll probably get smaller, but those that stay, I think it'll be that much better. You kind of always have that crew that maybe, I don't know, I've estimated like a third of people every year, sort of Buffett's going to die, so I need to go crowd. And it's not a bad thing, but you're not going to have that once they're gone. But they seem to both be in health. I mean, I was blown away by Charlie's Daily Journal conversation. I mean, some of his interviews, like, okay, kind of repeat some of the same things, like he's just kind of like repeating these same old things. But I thought he was on fire at the Daily Journal meeting. For 99, recalling all these things. And so,
well, Buffett's letter this year was seemed like he had run out of things to say, and he would just be repeating the same stuff he's been saying for the past 50 years. But it is nice to hear it.
I was hoping Greg and Ajit would have a page, 2 page, something, I was kind of hoping for more of that.
Maybe you can ask that question at the meeting.
Yeah, well, that's so. What would I ask?
Will we get a shareholders letter that has a page or two from the other managers? We would like to hear from them too.
He would probably say, well, you can ask any questions you want right now. No, I still want to ask, and and Buffett acknowledged it that he was slow last year. It wasn't bad, but it was just like I thought we were going to be able to answer
Yeah.
get a second one, in the overflow room there. But I still want to ask about the boards, the governance at the subsidiary level, because each of the companies has boards. Todd and Ted have served on some of them. I've heard some about them. They're largely an advisory board, but I'd like to hear more from Buffett on sort of how they're structured and how he thinks about putting them together. That would probably be my top question. How about you guys? What would you ask?
I've often struggled with what question would I ask that would sound somewhat intelligent, and I've always struggled with that. There's such a wealth of knowledge. I guess one question that comes to mind for me is about Geico. And one of the things I was thinking about is the effect of these billboard lawyers. They're all over the place with pricing. That's going to affect Progressive, Geico, anybody else. And what effect, are the rates going to have to go up just because of that? Is there any way to work? That's really an Ajit question.
Yeah, if I remember correctly, Ajit was pretty blunt about his assessment of how Geico was doing last year.
That's something they're both going to. Progressive has been more on the front lines with regard to the computer issues in the car and tracking and all of that kind of stuff. And Geico's been behind, but I've never heard anybody address the additional costs of these lawsuits and these lawyers that live very high off the hog with regard to the lawsuits they have against the winnings against these insurance companies.
Mm-hmm.
Does anybody want to exchange like phone numbers or text messages or emails so we can contact anybody up there? I'd be happy to put mine up.
Yeah, why don't
Adam and I generally try to sit together, so that might be a good thing too, to have everybody's phone number.
Yeah, why don't if everybody could send me an email with their information, I could just do it, do it. Unless I don't think I'm recording this and I'm going to post it to the other subscribers, so it's not like it's going out to the whole world. But I don't think the chat is recorded. Does anybody know
It
that?
says the messages are being recorded too.
Oh, all right. Well,
we can all just message you on our own.
yeah. If you want your information shared, send it to me, and then I'll send it to this group, so everybody has it. We could do it that way. I know, last year we met at the Bookworm, Helen, but it'd be good to, and we usually Andrew and I usually sit up in the overflow room, kind of just wander in.
Okay.
Yeah. You don't have to go in early to get a good seat there.
Where is that? Upstairs? I've never done the overflow room. The last couple of years I've been down on the floor, but I'm willing to go overflow room.
It's upstairs in the convention.
Over the convention center?
Yeah, if you're like in the, I mean, you can get there from the
really big, long escalator goes up there. And
Gotcha.
the Skyway, I think, goes straight to it.
Mm-hmm.
Okay.
Yeah. They're padded chairs, and I mean you're gonna be looking at a monitor anyways, unless you're there super early.
And the other thing that was nice about last year that will probably kick in again this year. Okay, I'm going to be ugly. The Chinese students weren't there in line early. Okay. You can start out with 2 at 4 o'clock in the morning, and there's 40 by 7 o'clock.
Yeah, I did the early thing once, and we've gone a little bit early, but now we're like,
well,
we just stroll in,
I think I did it until I was like 25, and then I stopped going early.
But then, I mean, even then, like, I mean, my first year I went, I think whatever it was, 5:30 or something, and struck
Yeah.
up a conversation with a couple of guys from Cincinnati, and we became good friends. And I stayed with them a couple of years, and they've kind of had to stop coming because of family, but young kids. But I think, I mean, there's a couple of characters I've come across, but I mean, by and large, I think 99.9% of the people that you talk to are, friendly and interesting, and
Mhm.
it's always good.
It's definitely been worthwhile to just talk to random people wherever you
Mhm.
go.
Mhm. Absolutely.
Well, unless there's anything else on anybody's mind, it's always good to talk to you guys, and even just a few of us. Nice little intimate chat here. Glad you guys could join us.
Thanks for having these, Adam.
Yeah, you're welcome. I think probably stick to just 11. 11 seems to be a good. I was trying. I think last time I tried 1 o'clock. It might be just too late, and um, I'll just have a regular 11 o'clock Eastern time, and kind of go from there. And whoever shows up, we'll just have a nice conversation. So, well, I will. I don't know if I'm gonna have be going on vacation, and then I'll probably put out an issue before Omaha. I don't know if I'm gonna have another one of these meetings before the Berkshire meeting, but I will definitely see each of you in Omaha in a month.
See you later.
All right.
Nice
Take care,
to-
guys.
Thank you.
You're welcome.